So the idea of the last panel is just to have a little sort of reflection on the event. We won't. So the idea was we'll bring some of the experts up on stage, and we'll just have a little conversation about some of the key takeaways from the event. Well, the panelists said to me, this is the last panel, and you don't know who's going to be here. So the panelists said, could I just check on the sort of intellectual level of the audience before the discussion? Yeah, and you understand why. So the discussion. And Terry was talking about wearables. So I thought I would just tell you a true story about a wearable, just to see where we are. So he mentioned Barclaycard. So, and I had a sticker. It was my favourite thing. Barclaycard. Roger's over there. Barclaycard made a sticker with an EMV chip in it. I love my sticker. And the first place I went to try it out, this is a true story, by the way. I took some people out, and I said, where do you want to go for lunch? And they wanted to go to Vietnamese, so we went to a Vietnamese restaurant for lunch. And when I went to pay my sticker, it didn't work. It was a payments faux pas. So I went to the... Now, come on. It was a payments faux... That's a joke in 3 languages, right? Because the Vietnamese, it's faux that you have in the Viet... But I didn't get any, so it's a faux pas, which is a hilarious pun in French. And the reason why I didn't get my soup was because the payments didn't work, so it was a payments faux pas. You see why that's a joke in 3 languages? Okay. All right, I think you guys, you're going to need to tone it down a little, okay? Just keep the words a little shorter, I think I've established.
No, Stuart Lee was going to be here.
Exactly. So let's begin just at a high level, just by talking generally. I just want to touch on a few of the key themes first before we dive down a little bit. So can I just ask you guys, also, reflecting back to previous, I know some of you have been here for a few years, just reflecting back, what would you pull out for people as the key themes? Just the 2 or 3 things that stood out for you. Anybody to start? Anybody to start. That was the code word, remember? That means start talking. Laura.
So I think the big theme for me was convergence. I think the opening session was about blurring lines. And that's what I see. We talk a lot about embedded finance, embedded payments, embedded commerce, embedded social. And all at the end of the day, we are all converging with each other. And so that's why I think one of the big things that we need to think about omni-channel, we need to think about customer first, and recognizing that we all have to be omni-channel and figure out how we light it up that way with blurred lines.
There was a lot more about open banking this year compared to the previous years, I thought, just walking around.
Open banking, as you said. So we talked a lot about open banking this year. Last year, we talked a lot about buy now, pay later, and before it was about, talking about the XPay wallet. So it seems like every year we have a new typology of payment method that is invented. It seems like it's a continuous invention cycle, among payment, to have a new typology of payment that is great to talk about every year. It's a non-ending process. And so to me, it's indeed, we talk about open banking payment this year, but at the same time, there are so many things around payment that are coming, with ID authentication, about the data that you have to manage more and more and more and more. And so to me, one of the key words was orchestration. Orchestration of all those services, new API, new payment method, new data, you name it, that you have to integrate to optimize your checkout experience. That's what I would say.
And I think in terms of convergence, also think about authentication and identity and trust. That's, to me, what I'm seeing in terms of convergence, like payments and fraud and identity coming together into more unified solutions that are trying to solve common problems with shared solutions. And you see more and more of this happening, so you cannot just think from a merchant perspective, okay, I'm going to solve some fraud problem and not think about payments, but more like, okay, how can I improve my authorization rate, for example, by providing more identity and risk and customer data with the entire value chain. And this is, I've been seeing more solution, hearing more things that can spark some ideas and something to work on.
I want to come back around to identity in a minute, but if we just stick with the open banking thing for the moment, the discussions in previous years about account to account and transitioning to open banking seem to have a little bit of extra energy this year because you're beginning to see merchants incentivize that transition, not this. Am I imagining that, or was that a...
Definitely. I mean, we launched open banking last year, so I suppose prior to that year, it's a concept, you know what's happening, you can see the growth. Now we're seeing the reality. So, you know, we launched it in Poland last year, and it's quite interesting, but we've had a lot of challenges with the banks to try and get them to actually play ball with the regulation. So, you know, there are some challenges there, and I'm pretty sure we're going to see those kinks over the next couple of years. It's not plain sailing. But then we're seeing some really good applications of it in the UK where, you know, in the wholesale sector, cash and carry, that there are certain sectors where it's just taken off because obviously customers want, you know, so as the businesses can see, they know the people are coming through the door, so they're not worried about the open banking chargeback, if you like. But then the differential between that and the card scheme charges is so vast that it makes sense to do it. So it doesn't, you know, it's going to take time to proliferate, but we're now really digging into the weeds and seeing what's actually happening out there.
Are you, in a way, aren't you a little bit surprised that for merchants that have their own apps, I mean, I'm thinking in the UK like Tesco Pay and things like that, in a way I'm a bit surprised that they haven't moved a little faster to bring A2A inside their own apps. Like I said, the open stuff where you deal with chargebacks and whatever, but where the merchant knows who the customer is and it already has a kind of relationship with the customer, wouldn't you expect to see the A2A stuff accelerate a little bit quicker?
I think the open banking part and the acceleration on the customer side still something that we need to win the customer trust more on open banking. It is more of a merchant-driven adoption as of now. And so, okay, why don't we get merchants to push it more, to incentivize it more? I think from a consumer perspective, depending on the use case, but for pure e-commerce, it's still something where people are more used to different options. For other use cases like paying bills or for specific markets where there is more awareness, there is some more traction coming. But what you're saying, like, you know, a customer, you could be pushing more those type of solutions.
But to Laura's point about embedded, you know, it would seem kind of natural to me that in a year, 2 years time, I don't know, I walk into IKEA know who I am, I've got my IKEA app, they've already authenticated me through, you know, Touch ID or whatever it is. I buy my stuff in IKEA and I just walk out and they charge it to my bank account. Like, anything else seems unnecessarily complicated to me, I think.
I think merchants are a little bit confused about how to deal with refunds. So I think we need to spend a bit more time talking about when you're using A to A, you know, how do you process refunds?
I mean, that's something that the ecosystem is working towards. Like A2A per se, it's just gonna pull in funds. So you need someone to help to build that additional refund flow. Yeah. And to me, that is one of the key things that has been hindering a little bit the adoption. Now I do see the solutions there. So probably the adoption is going to come also because of that is available.
That's the key thing. It's that reconciliation piece has been the big part of open banking. And I think, you know, to your point earlier on about what are we hearing at the show and what's happening, what I've noticed on this more than any other year I've been here, I think, is that it's probably the year of partnership. COVID kind of changed the game. Everybody suddenly wanted, you know, they probably got a time to get off a plane, sit back, look at their strategies, figure out what they wanted to do. Huge uptick in e-commerce, and then we've come out of it and everybody wants omni-channel and they want it all to be seamless. And I think we've all realized we all need to work with each other to get it done. Nobody can, you know, the expectation from the consumers and the merchants has gone so high. We find the best way to do it is collaborating with other partners to come up with something that the clients want.
I think this raises a really good point of my big takeaway from this show. As a founder of a fairly early stage startup within this space, yeah, there's probably people in the room would have been coming here for years and years and years. It's my first time, so I'm walking around, you know, bright lights and just taking everything in. But it is this comes across as very much an ecosystem, very much a place where I don't think payments was maybe 10 or 15 years ago, whereas a new entrant, you can literally walk around any stand and find a potential partnership opportunity for your business, the idea of payments being a kind of closed club and a very sort of difficult space to penetrate, I think has very much evaporated. It creates all kinds of opportunities. My biggest sort of takeaway shift when I've looked around is the seismic shift to soft POS and the amount of opportunities that creates for companies like my own, but any other startup is you've almost got this, I think, iPhone moment within POS where we go from this very kind of closed system.
I thought that I can't remember the exact figure, but I think the MasterCard slide said 35 million soft POS in Europe in a couple of years' time. That to me seems low, because basically since everybody's phone can become a POS, that would seem, a very natural place to grow, and not just for traditional merchants, but also for all of those little things like the collecting money for the kids' football team, and collecting money for the school trip, and all this sort of stuff. There's lots and lots of applications where you can see soft POS being embedded into those other apps on the phone. So that seemed an underestimate to me.
We had an interesting one where we kind of kicked off soft POS with the schemes with the MPOC solution in 2019. The first ones to do pin on glass. And we kind of thought SMEs and then retail were going to be where, queue busting was where it was really going to take off. What we've ended up finding is actually courier companies are the ones who've really, we've solved a pain point. So they've got Zebra devices or whatever device you need to sign on at the door. And if, let's say, the delivery happens on a Saturday and there's an extra charge, what was happening was they had a terminal in the front of the van as well. They hated bringing it to the front door. They just signed. Whereas now what we've done is embedded the payment app, SoftPOS, into the Zebra device, and they can't get the signature until the payment has happened. So courier companies are delighted because they're collecting funds that were being left behind, and it's digital, so it's easier for the customer. So that was, we didn't expect it to go that way, or for that to be a pain point, but.
And I believe that soft POS as well, the revolution of soft POS that you are describing also depend on the countries. I believe. At Thunes, we do a lot of alternative payment methods. That's what we do. So we are specialized in Alipay, WeChat, MBWay, all those QR code type of payment method. And in some countries, you don't pay with credit card. You pay with the local payment methods like Alipay, WeChat, MBWay, I mentioned them. And I can tell you that in those countries, the soft POS, the ability to pay with your QR code to someone that is in front of you that will scan your QR code has been there for a while. And indeed, so soft POS is a revolution for those countries like Germany, like France, where in-store, we pay with credit card. If you go to China, if you go even to some countries in Asia or even in Africa, I can tell you that the soft POS has been there for a while, a really long time, because everyone is paying with mobile money, with wallet and so on. That was just
look at M-Pesa. M-Pesa is the perfect example of that, right? And the thing is, the developing world, they're used to QR codes. We just haven't adopted it yet. The thing that brought QR codes closer to the forefront was COVID, because we had to use it in the pubs to buy a beer, right?
Yeah, but the other thing with soft POS that can happen is like open banking as of now is just something that you can use online. If you evolve the soft POS in a direction that can sustain also the open banking ecosystem, then you make that payment method more available more broadly, and also customers are going to be more keen to use it. Otherwise, you just have to stick with your plastic, because offline, that's what you're paying with.
I think it's interesting because there are some security issues around QR, I think. But I think you're right about the pace of the... I was telling... One of the examples I use is Kazakhstan, which I think is a very interesting example, because do you remember when they had the Borat movie, came out all those years ago, and it was about... he supposedly came from Kazakhstan. So I found, at that time, I can't remember how this came about. It was like a MasterCard conference or something. But I found out Kazakhstan had the highest penetration of chip and pin, when in America there was no such thing as chip and pin. So I wrote a little thing, which I thought was hilarious, about, no one else did, but I did, So when I went to Kazakhstan last year, and so I went straight to go and pay for something with my chip and pin, because I wanted to take a picture of me using chip and pin in Kazakhstan, because I thought this would be, again, I stress, I thought this would be hilarious. You can tell from the audience reaction that's not a universal response to it. So I went to a coffee shop and I bought a cup of coffee and a cake. I paid with my chip and pin. I took a picture of it. I'm happy. Sat down. I never saw a single person pay with chip and pin. Every other person that came into that shop paid with QR. Every single person. No cash, no cards, nothing. Everything was QR. We went up a mountain, going on tour up to these lifts up to the top of the mountain. There were QR codes at the top of the mountain to pay for everything. So, you're right about that. But I just wonder if it's not going to get short-circuited, because if we have soft POS, if people get used to just, like every time I owe you, like I tap my phone against your phone, people get used to I tap my phone against your phone, then one day you're going to get an email from Apple, which, let me remind you, has bought an open banking company in the UK. Apple bought Credit Kudos. You'll get an email from Apple that says, well, when you tap your phone on Laura's iPhone, is there really any need to bother those nice people at MasterCard? They're so busy with all those transactions. Why don't we just take the money from your bank account and put it in Laura's bank account?
They make some money, Apple.
They will.
From Visa and MasterCard still.
Yeah, but a few years ago, you would have said, maybe there's something in this transition to QR. But now I wonder if soft POS is going to trigger a sort of bypass of these things.
Be a mix, I believe. It's... I was talking with a friend here who is offering some soft POS solution, Deja Mobile, for instance. It's very credit card, and so it's well designed for NFC type of payment, contactless payment. But then his solution is completely ready to go for QR code payment as well. So it's going to be a combination of everything. My point was just not to say that this, QR code will replace soft POS or the other way around. It's just that we feel like it's a revolution. I just wanted to emphasize the fact that in many other countries, soft POS in a way has been there for like 10 years, for 10 years because of those QR codes.
I do agree with you, though. I think I can really see COVID has brought us from people taking the card out in a shop to being very comfortable paying with their phone. And the quantum leap then to pay with open banking at a POS terminal or in a face-to-face environment using a QR code is now, there is no leap from that, from what you're doing paying with Apple Pay or just, tapping with the phone. So, so I think that's coming. And then the other side of it is obviously Apple are going to, when Apple Tap to Pay becomes ubiquitous in Europe, that's really going to drive, that forward as well. So, I think
the other thing with soft POS, like you reduce the switching cost. Like you have a huge infrastructure today, hardware, that it's hard to replace. If you make available devices that are in everybody's pockets, you don't have to invest into new networks. And that's one of the reasons why the US is so behind. Like you have to replace that entire network, and it's a cost, and it's something that takes time. Once you make the switch and that solution is available, why don't just adopt it? What you have is just a sunk cost that you can put behind and move forward.
So
we launched payment in Pakistan 3 weeks ago or 4 weeks ago. Pakistan, only wallet. Only wallet. I mean QR code wallet over there. Only.
Do you want to know why I think we're falling behind, like in the US and the Western world, in payments?
The senile oligarchy dominating the payment issuing business?
Someone taught me this a long time ago. It's like, what's the enemy of great?
What?
Enemy of great is good.
Oh, I see what you mean. Yeah.
And the thing is, we've got it good. We've got good enough. It works. So, we kind of stop there. And to your point,
it's not a 10x difference.
Yeah. So, the people in the developing world, they just kind of leapfrogged us straight to mobile, and that's why we're falling behind.
I think. There's people who know something. So we, say, okay, it's good enough. It just works. It just works unless you're a merchant who's thinking, why am I paying like $2 for a transaction in America, where in the Netherlands it would cost me 12 cents? Like you say, it just works. It just works at enormous cost, at an enormous tax on the economy, the retail trade. So I understand what you're saying, but I don't think that means there's no impetus for change,
But the cost part is something that in the US is also driven by customers. Like you want your rewards, and it's hard to move away from that. Like I can give you a very cheap payment method. It's not going to have rewards. Are you going to make that switch as a customer, or are you going to be stuck in what you're being familiar with.
Absolutely.
No,
I think that
interchange
open
is a
banking is
narcotic.
really driven by the merchants so far. I mean, it's not something that the user wants. I can pay with my Apple phone, with my phone. It's easy. Now the battery is okay, so not like 5 years ago, where you were always missing some battery at the end of the day, but now the battery is okay. It's cool, it's seamless, it's secure. I personally don't care of open banking solution. It doesn't bring me any value added. That's really something that is so far, I believe, driven by, and it's cool. We have to go there, right? And we go there. We have a lot of open banking solution connected at Thunes, but it's really something we have to keep in mind. It's something driven by the merchant and by the government here.
The irony is, it's still a
user,
patchwork quilt around Europe in terms of how banks have implemented it and how how much they're sticking to the regulation. And the irony is, the only, this was brought out by the EU, the only country in Europe that actually has done it properly is the UK. So the only country who doesn't actually need to follow the rules is the only one who's actually implemented it correctly. With all the banks, that's what we're seeing around Europe, where you can't rely on the same level of approval rate and acceptance based on the current setup. That's going to take time to come. It's going to take pressure. It's going to take, it's going to take a period for that to really happen and be as reliable, let's say, as card payments.
Let's pick up on that sort of pan-European point a little bit, because there were one or two things that happened. Was anybody here at the central bank digital currency panel yesterday with the European Central Bank? Yeah, it was a little bit. Yes, it got a little bit out of control. Let me just say, the debate about digital currency is a heated debate, which almost ended up in the car park. And Angela managed to cut it off. But it was a very passionate debate, But that's one area where Europe might see something very different in that kind of 5-year horizon, because if there is a digital euro which works the same across all the Eurozone, you finally have a single... we're supposed to have SC Instant. It's all patchy and not everyone's connected and blah, blah. But in 5 years' time, you could have a digital euro that works the same everywhere across Europe. And that surely would lead to some changes in the way things are done, right?
I'd question whether there's a great consumer value in having a digital euro. If you go out and spend euros in whatever way you spend them today, what does the creation of a digital euro really do for the consumer? We talked, a little bit about the explosion of wallet schemes in, you referenced M-Pesa in Africa. And, it's a little easy to say we're slow to catch up in the Western world, but there's a common denominator use case for M-Pesa across the African continent. It's serving a largely unbanked population. It didn't take off quite so well in South Africa because they've got a decent level of credit and debit card penetration there. But otherwise, the reason it took off was that genuine use case for a consumer. It was the only way they had to pay with something for something digitally. We're clearly not there in Europe.
Well, I'm happy you bring up M-Pesa as an example, because Consult Hyperion did the original feasibility study for that, so I'm really rather proud of it. But the crucial difference between, it's an interesting difference you raised, but the crucial difference between South Africa and Kenya was that in Kenya, it was the telco. In South Africa and Tanzania and everywhere else, the regulators made banks get involved. And I'm sorry to say, in a room where there may be some representatives of that very important industry that's central to our prosperity. But if you drew a little graph of where banks were involved against the penetration, it told a very revealing story. M-Pesa in Kenya was successful because it wasn't banks. And this is kind of what I'm thinking about this sort of stuff, which is when you start talking about, unlike what we talk about now, electronic money that's going between cards and bank accounts and so on, when you start talking about digital euros, who knows? It could be Carrefour that turns out to be the best wallet and the best organizer and the best orchestrator, or Mercedes, but you know what I mean? Like it's that non-bankness of it which sort of interests me as a vector for innovation in this space, which links to what you were saying about the social commerce stuff. What if it's, I don't know, we're allowed to talk about TikTok anymore? Has that been banned But you know what I mean? Like, what if, like, we're all sitting here talking about credit cards and so on, and meanwhile, everybody that's 12 years old is using TikTok, and in 5 years' time, they'll be paying for everything in digital renminbi. It won't matter what we think about. You know what I mean? Like, there's something else coming, isn't there?
What? I read this great book the other day called The Currency Cold War.
Highly recommended, by the way, I have to tell you.
Written by one of our friends on stage. Yes. But it raised an interesting question. It wasn't just
I
about
thought there was
CBDC.
no selling on this panel. That's
There's
what
no
you told us
selling.
beforehand.
There's no selling. There's recommendations. It's
Well,
very
actually,
different.
It was quite eye-opening because it was being an American. I was listening to part of the audio book. It's on Audible, by the way, so you don't have to actually read. You can listen to it. But there was a portion, which is great for my old eyes. But there was a portion where they were talking about how we need a counterbalance to the U.S. dollar, because right now the U.S. dollar is 20% of the world's reserve currencies. And, you know, Mark Carney and Christine Lagarde are both calling for a global digital currency. So when you talk about CBDCs and you talk about a European CBDC or Euro CBDC, I think we need to go a little further and come up with a global CBDC. So, and I got the idea from you. So don't
Well,
argue with
I got the
me.
idea from Facebook, so that's not. But that didn't work, did it?
It will. Just because something didn't work 2 years ago doesn't mean it won't work in the future. You just got to get it right.
But in the European case, it's a political project. So it's, you know, whatever we think about merchants, you know, you can see in I'm guessing in sort of 5 years' time, the digital euro will be an integral part of the fabric. And if what we were told yesterday is true, which is it won't cost consumers anything, it'll be free to download and blah, blah, all this sort of thing, then actually a lot of the stuff that we do, the people in this audience do, a lot of those kind of intermediary roles will be under pressure, because for the average merchant, getting digital euros sent from your wallet directly to the merchant's wallet, no schemes, no switches, no issuers, no processors, or whatever.
But
You've
again,
got to say, that's pretty attractive.
It's attractive, but again, that is pushed by it's political.
I think
it's being pushed in Europe.
the political aspect
It's a
is
political
what
aspect.
don't make it customer friendly.
Certainly.
Because you layer on top some other conversations that are not necessarily just about transferring money and instilling trust. It's about controlling money and how people spend it as well. And that's the part where the conversation and the conflict can arise. You're not just talking about the payment method, you're talking about money supply and all of that as well.
Because today I can already send my euro from my account to the account of the merchant, to my friends. I can already do that. So that euro, that new euro is not going to change anything in a way as a consumer. So it's cool if we can go there. It might be more secure, less middleman, less dependency maybe to some big world partner that we know. But it's very economic. It's an economical approach. It's from a user's perspective. Standpoint. We are going to have the same difficulty from a user standpoint. I mean, adoption. Sorry, than for open banking. What does it bring to the user? What you said about M-Pesa, those wallets in Africa. Why are they using wallet over there? It's because the user needs it to pay. He wants it to pay. And all those, we have mentioned also that Generation Z guy, you know, the biggest part of the population in the world. Those guys, I mean, if you see them in a restaurant, they don't talk to each other anymore. They chat to each other when they are together. And so those guys, they were born with a wallet in the hand. And so those guys, their needs, of course, is that everything they do in their life has to be linked to that wallet, and payment as well. Here, I see an innovation that has a strong adoption because it comes from the user. Well, it comes from the user.
I agree with that point, but then on that argument, wouldn't you say that I mean, I agree with it. So the smartphone is the integral, I mean, for the next, I don't know, the next 15, 20, the next generation, the smartphone is the critical integral device. But then wouldn't you think a digital euro is more native to that smartphone world than what we're doing, which is taking 50-year-old cards and pans and things and somehow jamming them into smartphones and making them just about work. I mean, the digital euro will be native to that smartphone world.
But we already have open banking, which is just on its way, so we don't necessarily need the card. And I suppose when I look at this, I just think of, you know, the previous iterations, not quite a digital euro, but Money and then Pepsi over the last few years, and they just haven't quite worked because of that political angle. I don't think we've cracked in Europe how exactly to kind of get everybody on board with this. I think it has its way of coming, but I'll wait and see.
Just to remind the audience that Pepsi and things like that, were they banks or non-banks running those things?
Banks.
Banks, yeah.
CBDC is a
wanna bring that
political
up again,
conversation in every country. And if you look at the US, China, Europe, like in the US, there are states that are saying we're going to ban CBDC, like in Florida.
It's hilarious. This party like it's 1699. You know, they're banning something that doesn't even exist, right?
Because out of an ideology. And you attach a political argument on top of something that is more than just money.
Wouldn't you think in the freedom-loving state of Florida, people should be able to use whatever they want to pay? If you make laws which restrict what people can use to pay, like in El Salvador or North Korea or New York, actually, where you have to accept cash, that's an outrageous restriction on private contract. Wouldn't you agree?
When you think about like the way CBDCs are going to be used, is also to control how people are going to be used. So you put together, put against each other two different personal liberties, and people view those two things separately.
Let's ask the audience, because I want to find out what the audience think about it. Just out of curiosity. So who thinks that a digital euro will be a platform for innovation and new products and new services and a new generation of possibilities? Okay. And who thinks that a digital euro is digital slavery, which will render us under the control of the WEF and the Illuminati? Yeah, it's pretty even. It's pretty even at the moment, I have to report. So next year we'll have to cover it in a bit more detail. Let's move on to a couple of the other things, because I'm very curious about the kind of more forward-looking stuff, because it is interesting. I mean, I've been to this conference for a few years, right? And normally in the kind of wrap-up, like what's really going on? What's happening? What's new? It's, well, SCA version 2 has got an extra data field in with you know what I mean? Like that's the life we grew up with. Paul grew up doing the merchandising for the Osmonds. He ran the Osmonds fan club in London. And me, I was looking at APAC's 8583 fields. So in previous years, that's the sort of stuff we were talking about. This year, what's coming round the corner, you know, people have been talking about AI and the metaverse and what, like there's a sea change in what people see coming compared to what it was. The stuff we used to be excited about, you know, a marginal reduction in fraud rates under certain circumstances, that doesn't cut it with this audience anymore. So when you look at the forward-looking stuff, what's the stuff there that just out of the corner of your eye, you're walking out of this conference thinking there's something there that we need to do something about? The more forward-looking stuff.
My takeaway, and I've seen a couple of really good talks on this the last couple of days, is what payments can do as a set of rails to help merchants, to help retailers with their sustainability initiatives. I think that was really, really difficult to do a few years ago. We would see things sort of bolted onto the very end of a payments journey to perhaps, you know, carbon offset, and it was very much an afterthought for the vast majority of merchants. What I'm seeing now is merchants that are really thinking about really kind of two sides of how payments can affect sustainability. You've got the one side, which is literally the rails and the chain of their payment system and how sustainable are all of those companies they work with along the chain. But it's then what can they build around those rails? How can they use all of the data that is going through that chain to then allow their business to be as sustainable as possible, to offset the CO2 equivalents of what their customers just bought, or invite their customer to do that of their own account. A lot of great tech out there. I think this time next year, we're going to be seeing a lot of different experiences at checkout.
I've seen a couple of startups pitching that do this on the cards. You know, they analyze the card spending to tell you what your CO2 rating is. Obviously, I deleted buying tickets to fly to merchant payment ecosystem. I mean, I didn't quite want to see that on the total, but I get your point. That it was a little bit esoteric a couple of years ago, but it's becoming part of the customer proposition now.
I think to your point on AI, I mean, we've been using AI for years in our operations center, robotics and other things to try and automate. But I think ChatGPT for me is the thing that I just think it's probably the biggest paradigm shift since the internet. You know, the applicability of that, we've already started to use it for certain things, but it's sort of a frightening when you start using it and you know, the power is just endless, and the applicability, it's hard to even conceive where it's going to be. But I think we'll all come back here in a year's time and it will have moved on in the same way the open banking discussions have moved on into lots of reality and applications. I think we're going to see the same with that.
And do you agree that we need to hit the pause button for 6 months while we work out how dangerous it is?
So China is catching up.
Well, I mean, a pause button so that we didn't have to listen to Elon Musk for 6 months, I think would I don't see how you can hit the pause button on that. I mean, I kind of agree with you, like intuitively, there is something qualitatively different about the acceleration of ChatGPT into the marketplace compared to other things. Like there's something bubbling that I feel I don't quite understand, but I can sort of, you know what I mean? There's something is going to change.
Yeah, I think you had 50 million downloads in 30 days.
And the plugins that exist already are absolutely amazing. So,
For me, though, the biggest thing that we talked about at this conference that was new was the convergence of identity into the wallet, and the wallet expanding its usage, including identity, cards, open banking, blockchain, tokenization, everything all being in one wallet. And 2 years ago or 3 years ago, I think I had the scheme telling me that wallets would never work, but now they actually are. I think they've come into age.
Yeah, I wanted to circle back around to the identity thing for the end. So thank you for ruining my narrative flow, because I did kind of want to finish on that point, because I know I have a very narrow prism on this kind of thing, but it did seem to me, underneath several of the talks that I went to, what was really going on was a transition to digital identity. That's the thing that's wrong with all. That's why we have fraud. That's why Paul doesn't know who his customers are. That's why merchants can't deliver the loyalty schemes that they need in the absence of schemes. It's like underneath everything, there is something going on in identity that's going to change things in this space. And the question I want to sort of push on, because I genuinely don't know the answer, is so we could have said that last year. So what's different this year? What's different this year is we have the European ID wallet going into pilot. I think there's 5 pilots running already. And realistically, it's gone from being, you know, some sort of pipe dream of the Commission to, in a year or two's time, you know, you could have 300 million people with digital ID wallets, which suddenly changes the landscape that you're selling into. So I'm very optimistic that something is finally going to happen about identity, but that's because I'm a naturally optimistic person like Laura. But I'm just curious, do you share that sense that there's something happening on the identity side which is going to change what we're doing as well? No.
Yes, yes. Back to you, back to your questions, indeed, those identity check are key, authentication and so on are key when you do payment. And again, when you have payment in Europe or identity in Europe, but it's also about identity globally. And that's where I still see a challenge, because what we can do in Europe is great. But as I said, we launched Pakistan. Identity over there, you know, to check is not the same, is not as advanced as in Europe. And so back to your question, sorry, it's key. It's going to help a lot. It's going to make things more seamless in terms of payment. I'm always thinking globally, how are things going to move globally in those faraway countries, you know, that where we do payment as well, and how things are going to move over there.
But I think, you know, the reason I can sort of be optimistic about that, I think, is that we come from an industry where in the past, we used to have to make up our standards for these kind of things, and it took us a long time. So when we wanted to do transactions, we had to have 8583, and it took us years to sort out 8583 in all the fields, or APAX 30, as I still think of it. This is an age-related disorder. But now we're living in a world where things are ISO 222, the W3C verifiable credentials, they're FIDO. Like, this isn't stuff we're making up anymore. This is stuff we're using. And this is why I kind of see something changing on that side.
It does bring possibilities, definitely. I mean, to your point, I think this will help everybody innovate a lot more easily and bring it to a wider audience much faster. We created a financial inclusion product earlier on this year that we rolled out in Poland. We created our own Know Your Customer identity check for that, so we couldn't use a kind of a European standard. We had to we'd have to, rinse, repeat that in other countries, but maybe with this, if it comes in time, we won't have to. But what we did was, and with great help from MasterCard, they helped us to convince the issuing banks to allow MasterCard send rails and the Visa equivalent to be used for us to basically allow people to come into retail stores, deposit cash, put in your card into your terminal, and then have that directly send that into your bank account, because lots of people get paid cash in hand in Poland. We built the application in Ukrainian language and Polish language and English, so that a lot of people who've been displaced were able to, they get paid on a Friday evening. They want to get it into their digital bank account Friday evening, but no branches are open because they've all been shut down or they close at 5 p.m. The banks were delighted because it meant that they could offer the service, get the money into their account without having to staff up or extend opening hours. And citizens obviously loved it because they, if they want to buy a flight or buy something where they need to use a card, they could do this. And obviously retailers were happy that they were getting footfall. There was an attraction to come into the store. But that identity piece, we'll have to do it again for other countries, and there's a lot of demand. But with the identity on a European level, that would make that a lot easier.
I think the identity at the country level, I think that's still the problem, because we have a global economy, and forcing something at the national level or supranational level, you still implement some standards that are going to be only fitting that specific use case, and they need to be then adopted and translated into a technology that can be used in a frictionless way to pay.
I think the Commission's statement on the digital wallet actually uses opening a bank account as one of the key examples. If you have a digital ID from Germany or Sweden or Italy, you should be able to go to France or Spain or Portugal and open a bank account using that digital ID. I mean, that's one of the examples they give. So I think that cross-border interoperability is one of the things that's going to change. We're actually finally going to get it, but we're going to get it because of identity, not because of the underlying payments infrastructure.
But is that identity something that we need to connect specifically to a passport or a national identity, or is more the biometrical information that identifies you as a user? Like, that's also a solution for payments and for trust. Like, we need to know that Matteo is Matteo. Doesn't have to be my passport, but it has to be enough information to really identify myself, that to give trust to the different parts that I'm going to be the authorized person to transact. So I think those two things can go hand in hand, and one is more connected to regulatory efforts. One is more about simplifying the experience and making it smoother.
Okay, we're down to the last couple of minutes, so it's predictions time. So if I'd have said to you last year, what do you think is going to be big next year? I think some of you would have guessed open banking. You probably would have been right about that. I think one or two of you might have guessed orchestration. You'd probably have been right about that. None of you, including me, would have guessed AI. That came out of nowhere. So now let's play the game for next year. I assume you're all going to come next year, right? As Philip is your witness, you're going to come next year? Okay. So what do you expect to see big next year? Just one little prediction that we'll take away from the event, starting at the far end.
ChatGPT, I think we're only scratching the surface. I think in a year's time we'll see incredible applications of that. To your point about, do we take a pause? I don't think we can take the pause and kind of watch it. We need to go into it with a certain amount of trepidation, but I think for me, that's the one we'll see a lot about.
Next year, I don't know.
But you won't be on the panel next year.
But I will push for a bit further, so I'm taking less risk. because
Less risk.
I will be here next year. But in 10 years' time, I mean, 20 years ago, we had no smartphone. Nothing was done with the phone. I'm just wondering, I'm just thinking that in 10 years' time, we are not going to have any more smartphone with us. And so I'm just saying that everything that is happening with smartphone and digital payment, that will change, I'm sure. In 10 years' time, maybe 15 years, and we might pay with the arm, we might pay with the eyes, we might pay with whatever you want. But that's my answer to your questions.
In 10 years' time, we'll be pets of robots, so we won't have to worry about payments at all. They'll take care
Anyway,
of us.
you're right.
Please.
I'm similarly convinced that AI won't take a pause and it will have a massive influence over the payments environment. I can see a world whereby, we go from having this sort of myriad of payment options on a checkout being reduced down by AI to the most applicable versions to that customer. And we're maybe partway there now, but I think AI completely revolutionizes that. I can see applications in it where, we're already starting to see a lot of different flavors of say, buy now, pay later. And I can see an AI coming in and working within that chain to tailor it again to that experience for that given customer. So, yeah, I think we will see lots of things we see out there today with an AI element powering them and making them better.
Please.
Something more pragmatic, maybe. Seeing probably Apple taking more of a share of the financial decisions that we make, or at least being more part of those conversations. For example, like potentially opening up more their NFC chips and that enabling more use cases within iOS devices, but also seeing the direction that I've been taking into going to financial services and see such a big company that is very prevalent in everybody's life, or vast majority of the people, how can that transform also the way to pay? Like what we were saying before, like Apple has the potential to attach directly to a bank account and skip completely the card networks.
I think also, aren't Apple bringing out their metaverse glasses on the June?
Devices.
It's next June or something, I can't remember. But soon Apple are going to have their metaverse glasses. So next year, we won't actually be here, of course, because we'll just be on the glasses, sitting at home connecting. So it's a terrible vision of the future, but it might happen. Laura, please.
I think we're going to shift from talking about embedded finance and embedded payments to embedded commerce. I think that the payment companies, the wallets, the banks, the challenger banks are all going to be trying to figure out how to embed commerce into their customers' lives. So that's my prediction.
And actually, social media will be one of the key channels for that.
Naturally, yeah.
I think you're absolutely right. Listen, thank you very much, everybody. I just stress again, nobody knew what questions they were going to be asked. They came up here as experts to give you their genuine opinion on what they've seen over the last 3 days. I hope you appreciated that as much as I did, and I hope we'll see you again here next year. Thank you very much, everybody.